Hey, welcome back. It's JWalter here. To follow up my two previous videos I posted on YouTube with my housing market predictions for 2022 plus Redfin's, I want to follow up today's video with Zillow's forecast as well. Zillow is much more bullish on the market going into 2022 than Redfin, so I thought it'd be interesting to share their perspective. Of course, we all know that Zillow was very bullish on their iBuying program, but oops. Look what happened there. And by the way, if you missed my videos with my housing market predictions plus Redfin's, I'll leave a link below to those two videos. With that said, let's dive into today's video with Zillow's housing market forecast for 2022 and also for the remainder of the year of 2021. According to Zillow, home prices are expected to grow almost 4% in the 3-month period from October to January of 2022 and to end 2021 up by 19.5% from 2020. Their 3-month forecast going into 2022 of 3.8% is slightly lower than their previous forecast of 4.4%. They state the reasoning for this is due to the modest slowdown of home price growth from the summer to the fall months. I made a lot of videos about this seasonal slowdown on steroids, but the best way to share this with you guys is to have a look at this. I pulled this from Redfin's website, which shows the median sold prices in 2019 through 2021. Let's ignore 2020 for now and instead focus on how 2019 compared to 2021. As you can see, in 2019, home prices peaked around June or July before moderating for more or less the remainder of the year. That is entirely normal. When looking at 2021, home prices also peaked in the summer months and slowed down through October, which is also normal. But look at what's happening now. Home prices have started to rise ever since October, which of course is not normal. In my opinion, this is due to a lack of houses available for sale, plus historically low interest rates, which of course is fueling home buyer demand still. So going back to Zillow's forecast for 2022, they went on to say the following. Over the longer term, our expectations for home price growth have held firm. We expect home values to grow 13.6% over the 12 months ending October 2022. That's a lot more bullish than what Redfin is predicting. As I mentioned in my video from yesterday, Redfin believes that home price growth will slow to only a 3% gain in 2022. The reason why Redfin is not as bullish on the housing market in the US right now is because they believe that mortgage interest rates will rise enough to affect home price growth. Zillow, on the other hand, in the long term, believes that the market is going to climb due to tight market conditions with demand exceeding the supply of houses for sale in 2022. At this point, I can't even imagine an environment where we have a surplus of houses for sale because we've grown so accustomed to a lack of houses for sale. Many real estate agents such as myself have grown accustomed to writing offers within days of a houses getting listed for sale and also competing against multiple offers. It appears that the market, at least in the near term, is set to skyrocket next year. And this is because, of course, due to low housing inventory and low mortgage interest rates. But like I mentioned in my housing market forecast video, it just depends on how mortgage interest rates are going to change over the next year. Current mortgage interest rates are around 3.2% right now, and of course, that's historically very low. According to Freddie Mac, the average 30-year fixed-rate mortgage in 2019 was 3.94%. In 2018, it was 4.54%. And just for fun, check this out, because in 1981, the average rate was a whopping 16.63%. Absolutely insane. All right, so going back to Zillow's forecast, they believe that rising home prices will cause affordability challenges, but these low mortgage rates will continue to keep monthly payments within reach for those who can afford a down payment. And here's a graphic that I wanted to share with you to show how housing affordability has changed over the past year. A higher number, of course, means it's more affordable, and a decrease in this index means that housing is less affordable. Ever since March of 2021, housing affordability has more or less been declining, and this, of course, is due to rising home prices, which have risen much faster than family incomes. Zillow added a disclaimer to their housing market predictions for 2022, which in my opinion is very smart of them because there's so many factors that affect our housing market that are beyond our control. So for example, no one knows how many people are going to list their houses for sale next year. In addition, no one knows how high mortgage interest rates will reach as well. And here's Zillow's disclaimer. The expiration of mortgage forbearance programs adds uncertainty to the outlook for sale inventory. And elevated inflation heightens the risk of near-term monetary policy tightening, which will result in higher mortgage rates and weigh on housing demand. The Fed does have plans to taper their purchases of mortgage-backed securities, and that of course could increase mortgage interest rates. I also agree that there's some uncertainty regarding the expiration of the mortgage forbearance programs, at least when people exit their forbearance programs, but there hasn't been this dramatic shift in the housing market due to forbearances because, if anything, the market has been propped up by it. So for example, according to the Mortgage Bankers Association, or the MBA, out of all the homeowners who have ended their forbearance programs so far, at least through October 31st, 2021, only 7% either sold their houses or refied. So in other words, we're not seeing a massive amount of people who sell their houses after they end their forbearance programs. However, there could be issues ahead, so have a look at this. All right, so this is from data analytics firm Black Knight, and this is from their most recent data that they have for us through November 16th of this year. They are saying that there were approximately 7.7 million homeowners who either are still in forbearance or have exited. About 1 million are still in forbearance, but out of all the people who have ended their plans so far, at least through November 16th, 52% or almost 4 million people are still performing and are paying their mortgages on time again. Approximately 24% or 1.8 million paid off all their missed mortgage payments already. In contrast, 7% or 543,000 are in a post-forbearance loss mitigation. This means that approximately 543,000 homeowners are currently working with their loan servicers to try to figure out how they're going to pay back all their missed mortgage payments. Are they going to pay back all their missed mortgage payments in one lump sum payment? Or will they do a partial claim or a loan deferral where all their missed mortgage payments are added to the back end of their loan and their term of their loan just gets extended? Or will they do a loan modification? On top of this, 264,000 are currently delinquent and 38,000 are in active foreclosure. It's too early to tell what will happen with these homeowners who are currently working through a loss mitigation plan with their loan servicer, plus those who are currently delinquent. This is because more than 750,000 borrowers left forbearance plans over the past 45 days. And given this large volume of people who have ended their forbearance plans, the success rate of these loss mitigation efforts won't be known perhaps for weeks or months from now. And of course, I'll keep you updated regarding this, so stay tuned. All right, so for the fun of it, I actually did some digging for you guys. I wanted to see, was Zillow's housing market forecast for 2021, was it accurate? I'll be the first to admit that my housing market forecast for 2021 was absolutely wrong because I thought mortgage interest rates were going to rise enough to affect home price appreciation. Obviously, that did not happen and I was absolutely wrong, but let's have a look at Zillow's forecast that they actually published in December of 2020, which actually was fairly accurate. So according to Zillow, they said, the for sale housing market showed incredible strength in 2020, and we expect 2021 will be even stronger. Demand continues to stay high and is expected to surge in cities as economies reopen. Annual home sales growth is expected to be the highest in almost 40 years, and financial certainty brings more sellers into the market to meet the heavy demand. Yes, 2021 ended up being a lot hotter of a market compared to 2020. However, we didn't see a giant influx from sellers listing their houses for sale. So for example, according to Realtor.com, new listings are down 12% compared to 1 year ago. Zillow went on to say the following from their forecast from a year ago. We expect 2021 will be a year unlike any other as the housing market responds to the challenges and changing preferences that emerged in 2020. Yes, the housing market this year has been unlike any other, but what do you think about their forecast for 2022? Do you believe that home prices are going to increase by almost 14%? Comment below. And if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. Hope you have an awesome day and look forward to seeing you on the next video.